The recent epidemic of home foreclosures has created an environment of paranoia for both lender and borrower alike. At the heart of this paranoia is the federal government, which created haphazard conditions in which lending institutions were required by law to operate. The two banking entities adding kerosene to the home loan market bonfire are the Federal Home Loan Mortgage Corporation, or Freddie Mac, and the Federal National Mortgage Association, or Fannie Mae. Both institutions were created initially to provide a market pool by which federal funds would be used to secure mortgages in the event of default. Under the umbrella of the National Housing Act of 1938, a standard of mortgage lending was established to grant access to the housing market to more Americans in the midst of the economic depression of the 1930s, as well as other protections for both bank and borrower. This brought forth an alphabet soup of government institutions with the authority to establish federal regulation to control the mortgage lending industry to this day. Since the 1950s, the mortgage lending industry has been bombarded with regulations, leading to a snowball effect of confusing and conflicting regulations that have slowly added to the cost of doing business and increased risk. While predatory lending practices by banks has been the primary focus of blame in the mortgage upheaval, the real culprit has been overreaching government regulations that forces lenders to assume extraordinary risk when approving a home mortgage application. In the name of helping people to gain easier access to the housing market, an environment for fraud and abuse has been created that has actually driven up the cost of banking. With recent regulatory changes by the government, it has now become more difficult for high-risk borrowers to obtain a home loan, creating more stability in the housing market. While mortgage fraud is a growing problem in the U.S., the trend has been slowed by tighter adherence to existing laws, while lending institutions have been able to exercise more discretion in qualifying prospective homebuyers for home loans. For the new homebuyer, the tightening of lending practices may seem discouraging, but the fact remains that mortgage lending companies need customers and still compete aggressively for new business. This means that the prospective homeowner should prepare for the task of taking on a mortgage through careful budgeting, saving, and investment, and not venture into the risk of borrowing for a home before he or she is ready to do so. With hundreds of thousands of dollars at stake, this is one investment in a person's life that should not be taken lightly. Federal Mortgage Services, financing you need for the home of your dreams.